Hello, this is the presentation for the financial performance for Berjaya Corporation Berhad to provide financial advice to investors. The presentation will be based on financial reports of the listed company for the last 5 years. This is the content of the presentation. As an introduction, the group has a 3-year strategic plan where they have since streamlined their business into 4 business segments, namely retail, hospitality, property, and services, to remain focused as consumer group. BJ Corp assumed the listing of Berjaya Group Berhad on the main market of Bursa upon the completion of the group restructuring exercise in October 2005. Ownership governance structure. Berjaya Corporation is a family-owned business where family members of Tan Sri Datuk Sri Vincent Tan are involved with the majority of ownership, which is about 19.6%, and control lies within the family. Below are the main people involved in the firm governance. The co-chairman is Tan Sri Datuk Sri Vincent Tan and Datuk Sri Robin Tan, while the co-CEO is Vivian Chang and Mr. Said Ali. Director shareholding. The surname several of the directors are the same as the substantial shareholders, indicating the presence of owner and family members in the firm's governance. This is the financial highlights. During the financial year 2022, the group's total revenue rose to 8.16 billion, marking a 9% increase compared to 7.46 billion revenue recorded in the previous year. Profit before tax was 230.57 million compared to a pre-tax loss of 260.39 million.
Moving on to the financial ratio for Berjaya Corporation Berhad, to be compared to the previous 5 years from 2018 to 2022. For the result of the current ratio showing a decreasing a little bit from 2018 to 2019, which 1.13 to 1.11 respectively, but increased to 1.24 in 2020, but decreased back in 2021 with 1.01, and increased back to 2022 with 1.07 times, which mean that their assets have high liquidity to turn into cash. Alright, we're moving to the average collection period. For the average collection period showing the result of 2018 with the 72 days for collection of receivable account, increasing to 2019 to 2020 with 115 days, but decrease to 2021 and 2022, which the latest days, faster days, which 100 days to uh, receive a collection of account receivable. For the days in inventory showing the result of the number of days from 2018 to 2022 have been decreasing to from 106 days to 93 days of holding inventory before being sold. Alright, moving on to the debt ratio showing the result of 2018 to 2022, there is no much different as in 2018 the results show for 0.5 or 50% to 0.55 in 2022 or 55%. So we can say that the debt ratio of the company, where the financial of the company are highly financed by the debt. But if we compare the debt and an equity ratio of the company, showing that the equity are relatively highly financed by the equity for the Berjaya Corporation Berhad, because as we see on the result from 2018, uh, the number of the percentage on 2022 is only 1.3 or 30% compared to the equity ratio. Alright, for the long-term debt to equity ratio, showing the increasing from 2018 to 2022, which is from 0.52 or 52% to 2022 with 0.75, which is 75%, the company own a long-term debt compared to the equity. For the time interest earned, showing increasing from 2018 to 2022, which from negative 0.46 to 1.11, which is the ability of the company slightly not too high, but have an increasing from the previous year, which is from 2018 showing the result of negative 0.46 to 2019 1.4, moving to 2020 0.6, and keep on decreasing on 2021 with negative 1.32, but moving on to 2022 with slightly higher with 1.11. For the account receivable turnover, they're showing the increasing from 2018 to 2022, which is from 2.8 times to 3.64 times, which is greater times of account receivable are collected over a year. For inventory turnover, showing there's no much different from 2018 to 2022, but slightly higher days, from 3.43 days to 3.88 days of 2022 of the inventory turnover, which means that there is high times, much more times of inventory being sold and replaced over a year. For the gross profit margin, uh, for 2022 showing increasing from 0.3 or 30% from 2022, which 26% or 0.26 times, which means that the company have increased in net income performance as a percent of sales. And for the return of equity for the Berjaya Corporation Berhad, showing the highly ability to generate profit from shareholder equity as it increased from 2018 to 2019 from 0.02 or 2% to 0.09 or 9% in 2019, but slightly decreased for on 2020 with 0.06 to 0.01 in 2021, but increased back in 2022 with 0.06 time or 6%, which means that the company have increased or have increased the ability to generate profit from the shareholder equity.
So next we go to weighted average cost of capital, WACC. Management evaluations prospective investment project to WACC. Berjaya Corporation Berhad uses a combination of debt and equity for financing. The average cost of capital must be recorded because, according to the analysis, the cost of debt is often lower than the cost of equity. However, a business occasionally raises more capital from one source than another. It would be erroneous to simply take the average of the expenses of debt and equity. As you can see, total debt is more than total equity. The proportion of each funding type, debt and equity, in the total capital structure must be taken into account in order to get the weighted average cost of capital. Berjaya Corporation Berhad use more equity financing because it is better for the company in terms of financing. Next is optimal capital structure. Berjaya Corporation Berhad managed to control the finance by debt over the 5 years, relatively financed by equity more than the debt, lower percentage of long-term debt over equity. The debt to equity ratio will remain stable as a company equity expands as all it can be used to settle debt or buy new assets. Berjaya Corporation Berhad need to lower their debt equity ratio in order to stabilize the source of finance by equity and debt. The company make a better move in 2022 where the finance by debt are the lowest among 5 years and the ratio are below than 2. In this case, the company could focus on how to have a fairly sources of finance by debt and equity. The company also need to analyze on the long-term debt since the percentage has been increased and the highest percentage over 5 years. The lower the long-term debt to equity ratios are, the better. Hence, the company still have a good ratio on it.
These are some of the significant announcements which may have influenced the share price of Berjaya Corporation Berhad. Some of the announcements are BJ Corp in talks with CIS Insurance for asset acquisition in January 23. Berjaya Corporation evaluates potential acquisition in financial services, December 22. Berjaya Corporation and MNC partnership to explore e-money business, December 22. Berjaya Corporation Berhad commences an equity buyback plan under the authorization approved on December 15. Group CEO announced strategic transformation plan, June 21. Berjaya Corporation Berhad announced appointment of Inchi Abdul Jalil as new CEO of the group, March 2021. Calculated beta and required rate of return. The calculated beta from Yahoo Finance is negative 0.12 for the company, which describe that BJ Corp investment that tends to increase in price when the general market price falls and vice versa. As the returns available from the market fall, lending rates will generally rise. If the risk-free rate is 4% and market risk premium is 6% based on capital asset price modeling, the required rate of return of the company shares are as follows, which result in negative 0.24% required rate of return. It is negative when an investor puts money into an asset that drops in value to a point below the amount paid by the investor. The rate of return might turn positive the next day or the next quarter, or it could decline further.
So we move to the movement of BJ Corp at FTSE Bursa Malaysia KLCI, where the chart of movement of BJ Corp in the monthly share price over the last 5 years is in front of you, where the brighter line is actually KLSE line and the darker line is BJ Corp line, where the Berjaya Corporation Berhad shareholders have seen the share price rise 25% over 3 years, where it started on January 2020 and end on January 2023, well in excess of the market decline 7.1%. However, more recent returns haven't been as impressive as that, with the with the stock returning just 20% in the last year. Berjaya share prices are closely correlated below the FTSE Bursa Malaysia KLCI line from the past 5 years. The share have shown a downward trend from 2017 until March 2021, where the share had a sudden rise of 150% before it stabilized around RM 0.25 cent per share for the last year.
Dividend policy. Except for the financial year 2020, the board of Berjaya Corporation Berhad did not recommend any dividend for the financial year ended 22, 21, 2019 and 2018. The company are mostly exercising a no-dividend policy on stocks, which means they are investing the money that might go otherwise to other dividend payments into the expansion and overall growth of the company. This means that over time their share price are likely to appreciate in value. In fact, Berjaya Corp shareholders have seen the share price rise 25% over the last 3 years from January 2020 to January 2023.
Okay, next, the recommendations. As an advisor, after look at the financial results, future outlook, stable growth of financial health and sustainability, we can summarize that it shows a good and stable for previous 5 years from 2018 until 2022. We also can conclude that Berjaya Corporation Berhad is a good company to invest on, especially previous 5 years, as they are able to overcome the crisis of economy in 2022 when COVID-19 dispersed and worsened the economy, but they're able to bounce back in 2022 and sustain their company with the stable result in financial. That's all.